Seth Freeman of Glassratner Advisory is joining us right now on the show. Seth, thanks very much for taking out the time. We are seeing proactive measures by most countries. In fact, now most of them in lockdown. UK was the latest one to go in lockdown. India just did that 2 days ago. What's the sense that you're getting now that we've got the full ammo of the Fed? They're talking about unlimited purchases, asset purchases, pumping in money into the economy. Do you think that's going to work?
Well, I think, as you astutely said a moment ago, the market is one thing, and dealing with human beings and this situation that we're all in globally is a completely different situation. The problem is that even though the Fed and other governments can provide this economic assistance, we don't have any visibility on how long this crisis is going to maintain and whether it's actually going to be enough.
Right, Seth. So most experts that we talk to have said it is first a health crisis, and then you talk about a monetary crisis or an economic crisis. Once we get any sort of an indication or a visibility that there is an end to this health crisis, only then will the markets, be it equity markets, be it the bond markets, be it any indication of the economy picking up, any projections of the economy picking up will come in. So in light of that, should one probably just brace themselves for maybe more downside if this doesn't settle in?
Well, we talk about the risks of negative sentiment just from normal risk aversion when there's not a global pandemic going on. So I think that's absolutely mandatory because we just don't have enough knowledge about what to expect. Plus, I think this is even as the infection rate and the mortality rate declines and maybe even flattens out and goes away, I think it's going to take some time for particularly consumers, even though some people may believe there's going to be pent-up demand. I think there's going to be a change in attitude for some time about what's out there and is it really gone.
Seth, good morning. I'm just trying to keep this simple. This Fed move, does it meaningfully alter the course or help in altering the course, or would you believe it's too early to say?
It's a little early. We have some targeted industries that the government's particularly concerned with: aviation, real estate, oil and gas. Oil and gas was getting impacted already with Russia and Saudi increasing production to very high levels. And now we have a situation where consumer demand is way down. I'm here in the San Francisco Bay Area, and California has relatively high gasoline prices compared to the rest of the country. And gasoline at the neighborhood station is down to $2.60 a gallon. Just 2 weeks ago, it was practically $4, as an example.
Okay. So, Seth, if you were still invested in the markets, this pop that we're seeing today in the Asian screen, and likely the U.S. markets will start off 4.5% lower, higher if the futures are to be believed, would you be cautious and maybe take out some positions, or would you believe that the valuations are too compelling to do any kind of selling currently?
It depends on one's view.
What's yours?
What's my view? Well, I can tell you in many respects, we've stayed in the market. We have a long-term view. If someone is adventurous, maybe this is the time to look at select companies that have the wherewithal to survive through this. But I do think there are going to be many companies that just don't have the staying power. They may not have the credit available Or, for example, today, a large movie theater chain is hiring advisors, AMC, and other companies that just don't have the staying power. Many companies have leveraged up quite a bit during this sustained economic period. And, a month, 2 months, 3 months of poor revenue is just going to knock them out.
And that's, that's a view that's unanimous across the globe. It's not just the U.S. equity markets. It's probably the voice that we hear from Indian experts as well as to which kind of companies that one must look at from an long-term investment horizon. Seth, thanks very much for taking out the time and joining us this morning with your thoughts.
Thank you.